Hello and welcome. Today I'm going to talk about one of the most important topics I've ever talked about on my YouTube channel, and that's the hidden dangers of the stock market. It's going to be a very important slide presentation, particularly for beginners, and I'll talk through my own experiences and the pitfalls I've experienced as well. So, stock market hidden dangers. The stock market, it's one of the most talked about ways to build wealth, and yet it hides dangers that can catch even the most experienced investors off guard. And that's very true due to geopolitical events, companies having poor earnings reports, poor forward guidance that can cause wild swings in stocks. Today, we're uncovering the hidden dangers of the stock market and how you can protect yourself from losing your hard-earned money, which is very important to do, and always only invest with an amount that you can afford. Hi everyone, welcome back to my channel. Today, we're diving into a crucial topic, the hidden dangers of the stock market. We'll cover the pitfalls that every investor should know and the strategies to minimize risk. Whether you're a beginner or a seasoned pro, these tips will help you, and they definitely will. I wish I had someone to guide me through them as well when I started out. So let's start with the first danger. Market volatility. Stocks can be unpredictable, especially in the short term. One day the market is up, the next it's down. Sudden events like economic crisis, natural disasters and geopolitical tensions, which there's a lot at the moment, as I'm sure you're well aware, can trigger massive swings. This can cause panic sell-offs, leading to significant losses if you're not prepared, and be very careful. Always set your stop losses, etc. So how to protect yourself. I have a picture here of a guy who his stocks are not going too good and he's pretty down the dumps. So no, on a serious note, so how to protect yourself. The key is to stay informed and have a long-term perspective. Don't make impulsive decisions based on daily market movements. And that's what day trading is. That's what scalping is. That's watching the candlesticks, trying to buy when there's a big jump in the candlestick, short when there's a smaller. It wouldn't be for me, and it's pretty dangerous for anyone starting off, especially. Stick to a strategy, diversify your portfolio, and remember that patience is often rewarded. And yeah, holding on to your stocks and let them go up and down. Set your stop loss. Don't keep watching them, and in a few months, hopefully, things will improve for you. That's the way I invest, and it's investing rather than day trading. I do. Emotional investing. The stock market can be an emotional roller coaster. Fear of missing out or FOMO during market highs or panic during market crashes can push investors into making poor decisions, especially if they're losing money and especially if they're using leverage. Be very careful. You might feel tempted to buy high or sell low based on emotions rather than logic. Yeah, if you're losing money, all logic will go out the window and you will make stupid decisions. Here's a pro tip. Establish clear investment rules. Decide in advance your entry and exit points for each stock and stick to them. Use strategies like dollar cost averaging to buy in regularly rather than trying to time the market. Dangers of leverage. So you can see leverage here, the picture I have. So 200 with 50 is to 1 leverage makes a value of 10,000. So one of the most dangerous traps is using leverage, such as margin trading. And I have to admit, this is how I started a few years ago. I'm not bashing the broker or anything, but I did use a leverage, and it was a CFD only broker, and yeah, I ended up losing money in the space of a year and a half because there was wild swings. Your losses and your gains are amplified, and I just couldn't make a go of it. So I don't mind admitting it. Essentially, you're borrowing money to invest, which can amplify your gains and losses. In a falling market, you could owe more than your initial investment. Now, that didn't happen, thankfully, but it can happen. To avoid this danger, it's best to stay away from margin trading, especially if you're new to investing. Stick to what you can afford to lose, always very important, and always be weary of borrowing money to invest. Remember, the stock market is not a get-rich-quick scheme, and especially if you're losing leverage, losses and gains are amplified. Be extremely careful. Actually demo trade with leverage and you'll see the difference between a non-leveraged and a leveraged account. So another danger is the herd mentality. When everyone is rushing to buy a hot stock, it can create a bubble. Think of the dot-com bubble in the early 2000s or the recent meme stock frenzy, where there's pump and dumps. Following the crowd can lead to overpaying for stocks that are already overvalued. So it's important to do thorough research. To counter this, always do your research. Don't just invest because it's the latest trend or because someone else is doing it. Assess the company's fundamentals, financial health, and long-term potential before putting your money on the line. Yeah, when you're investing in stocks, you're investing in a company, and you're investing your money on how well you presume this company is going to do in the future. If the company is not doing well, don't invest. That's as simple as that. Unfortunately, the stock market has its fair share of scams where fraudsters artificially inflate a stock price and sell off their shares, leaving other investors with losses. A very, very shady thing to do. It's a real threat. Fake investment platforms can also steal your money if you're not careful. Choose a reputable broker. Always use a reputable broker and be wary of hot tips from unverified sources. If it sounds too good to be true, it probably is. Do your own due diligence and only invest through trusted channels. And I remember I was part of a Discord chat room, and one or two people befriended me, and it seemed nice in the beginning. And then they talked about, they'll invest for me and they're guaranteed gains in crypto, guaranteed gains in these stocks. There's no guarantees in the stock market. There's no guarantees in crypto. They don't know that you're going to get a 33% return every month. It's rubbish. Nobody does. Lastly, let's talk about diversification. Putting all your eggs in one basket. It's a classic mistake. Investing heavily in a single stock, sector, or market exposes you to higher risk if that particular investment fails. Conclusion. Diversify your investments across different sectors, asset classes, and even geographical regions. A well-diversified portfolio can help cushion the blow when certain markets take a downturn. The stock market can be a fantastic way to grow your wealth, but it's not without its dangers, which I've outlined. By understanding the pitfalls, market volatility, which I've talked about, emotional investing, leverage risks, herd mentality, scams, and not diversifying your portfolio properly, you can navigate the stock market more confidently if you bear these things in mind. And do watch this presentation a few times if you need to, just to remind yourself of the dangers, the pitfalls, and what to watch out for. So stay informed. So invest wisely, stay informed, and always have a strategy in place. If you found this video helpful, don't forget to like and subscribe, and I appreciate you for watching, and I really do hope this helped. It's very important. A lot of people talk about hype up stocks and they talk about how good things are, but very few people talk about the dangers, especially when starting off. I've seen them all. I've seen them on a demo account, I've seen them on a real account. I've lost money due to leverage in the first year and a half investing, and it was a lesson learned. I got burned, and I hope you don't.